Hey YouTube, Jason here with DayTradingFearless. Welcome back to my channel. If you're new, welcome. Make sure you hit the like button and subscribe. Any questions, comments, put them down below. And as always, let's jump right into it. So this is not a paid advertisement video. I just really like Nadex. I like the product, what they do, and all that. So what we're looking at are Nadex binary options, and today we're going to go over are what are the call spreads in Nadex. How can you trade them, which ones to trade and which ones not to trade, okay, and how they actually work. So right here we have, if we click on binary options, call spreads, knockouts, right, we're going to look at call spreads. You have three choices: indices, forex, or commodities. So I trade the ES S&P E-mini futures, so we're going to go there. We're going to look at the US 500, and as you could see, there's a daily option or daily contracts, right? Now, intraday, they actually have intraday contracts that run for a couple hours, right? And those contracts I do not recommend to trade. And the reason I say that is because they're only $10 wide. And when they're $10 wide, is when you're at the money, like right here, these are $40 wide contracts, and these expire tomorrow at 4:15 p.m. Okay, so let's say the current price is $29.24. Well, if we look at the 2900 to 2940, we're kind of right in the middle of that. So let's click on this contract. Okay, let's drop this down below. And the way this works, okay, the way this works is we're right in the middle of this contract, right? So what we're saying is, hey, if we're bullish, we would buy it. If we're bearish, okay, and we think prices can go lower, we would sell it. Okay, so if we sell it, you'll see price has to go down below for us to make money. If we're buyers, it would go up. Now, here's the thing about these call spreads with Nadex. Think of it this way. Every one contract represents 100 shares of SPY. Okay, the other thing with this, with a Nadex, is there are no day trading rules. It's a futures and commodities product. It's legal. It's regulated by the CTFC. It's probably one of the best products you could trade apart from futures, because for tax purposes at the end of the year, you get one piece of paper. You either made money or lost money. It's not like stocks. You can buy and sell them all you want. There's no day trading. You don't need 25,000. And whatever your max loss would be, like right here, is the total capital that you would need to do a trade. Okay, so if we go 2922.0 to 2922.50, let's say we buy this right now, okay? Well, if we want to sell it right away, okay, well, we could sell it for essentially $5 less, right? So every one of these represents $1, right? So if we buy this at 22.50, okay, watch this. 29.22.50, our max loss would be 225. If I actually just change that to 23.50, it goes up by $10, 225 to 235. So every $1 move is essentially a $10 move, right? Or every 10 decimal point over is $1, right? So 3.3 to 0.7 is $4, okay? So if I think it's going higher, I could it's, again, it's just like buying 100 shares of SPY, but only using $235 of capital, and we get dollar for dollar move to the upside or downside, meaning if it dropped about 5 or 10 points lower, 5 or 10 points higher, we'll make about $50 or $100, right? Now, the problem is there is time decay built into these. So let's now look at this 2920 by 2960. Watch how this risk profile changes. If we were to buy it, now what we're saying is if it goes up, right? Look at this. We could buy this, but price is at 29.24, but look at where this is, 29.35. Okay, so there's about $10 worth of premium built into this right now. So if we did this trade, even though we're only $4.50 away, or points, right, from the lower end of this, right, the range, we're risking $150 versus just $54, right? That is time decay. So you got to be careful. Even though we're at the lower end of the range, you got to be careful that even if it went lower, okay, so let's say we buy this, it goes lower overnight, and then tomorrow it rallies. Our break even is 29.35, which is way up here where my mouse is. That's our break even. So we still need a $10 move just to get to break even when this contract expires. Now, if we get a massive run, of course, this will kind of go up. And if we got up to 95.50, then some of that time decay comes out as time and it gets more at the money, right? As we go, just like we saw these, right? The 2900 to 2940, now it becomes more at the money type of thing. Now, the ones I say don't trade, you can't see them now, but if you log in during regular trading hours, they're the ones that expire in, we'll say, 2 hours, and they're only 10 points wide. Well, if you're at the money, right, like in between, we'll say, we'll look at this again, right? If we're kind of right there at the money, okay, if it goes up or down for $1 or $2, you'll make like $10. But then as we go closer, that money you make for every dollar move higher will drop. And so let's say we're at 20, right? And it's only a 10 point wide. Let's say this is 29.20 by 29.30, and we're currently at 25, right? Well, if it goes to 26, we'll make about $10, right? But then if it goes to 27, we'll only make about $8. If it goes to 28, we'll only make about $6, because remember, there's still time decay. So even if it went to like 30, 32, we would think, okay, it should be worth $50. It's really not, because there's still time decay left, and that has to burn off via time. So we might only make, on a 5 point move or a 6 or 7 point move, let's say rallies to 32, that'd be a 7 point move from my example, we would only make maybe $30 because of time decay. So that's why I say I don't like them. But the way to trade these, the best way to trade them, is look for future for the contracts that are trading right in the middle of the range. Now you have bigger ranges, right? 28.20 to 28.60 or 28.80 to 29. So let's look at this. This is kind of like right in the middle, a little higher than the middle, but think about this. The indicative, the ES futures are at 29.28. Well, we're at 29.26. If we were to buy this, we're only about 2 points off. So there really isn't that much time decay. So if we're only looking for like maybe a 5 or 10 point move, if we get that move, we'll make about $90 to $100. It'll be a dollar for dollar move like it should. But if we were to do a trade like this over here, where it's like 28.80 by 29.20, right? And we're going lower. Well, look at this. There's $9 worth, $10 worth of premium. My total loss, max loss, if it stays above, is $103. So I need this to fall this entire amount, right? And then another $10 just to get to break even. So 29.10 would be my break even. So I need almost a 20-point move just to be at break even by expiration. So just some tips and tricks of how to trade the call spreads. These are, like I said, to sum it up, trade in between and then look at that, and don't worry so much about how much, like this trade right here, 29 by 29.40, right? We're kind of in the middle. Yes, you're risking a lot. You need 230, but we're only looking for maybe a 5-point gain to make maybe a quick $50 or whatever, and vice versa. And if it goes against us by $5, okay, we lose, and we lose about $50. Remember, you can buy and sell all these. You don't have to wait to expiration. It's just a great trading vehicle. If you don't have a lot of money, if you can't do the 25,000, if you don't want to trade the S&P E-mini futures, and it's one of those things where you have time to be right. Like I could go short, it could go against me, come up, and then later on overnight it could finally go in my direction, and I know what my defined risk is. So I hope you enjoyed this video, and until my next one, we'll talk to you soon. Thank you.